Given the bullish price forecast for Bitcoin and the current price hovering near support, a long-term investment strategy appears promising. Price history shows a general upward trend, with recent dips finding support. The forecast suggests continued growth over the coming weeks, reaching levels above $70,000. Therefore, the suggested strategy is to initiate a long position in Bitcoin at the current price around $67,540. A stop loss can be set at $66,000 to limit potential downside risk, while a target price of $71,200, aligned with the forecast's highest projection, offers a substantial profit potential. This strategy capitalizes on the anticipated upward momentum, while managing risk through a well-defined stop loss. Holding the position for the medium to long term allows for greater potential gains, as the forecast suggests continued price appreciation. Ethereum. As recent price history shows a generally upward trend with some fluctuations, while the forecast predicts further growth, reaching potentially higher levels, it's important to acknowledge the potential for volatility. Considering these factors, a medium-term investment strategy appears most suitable for Ethereum. This approach allows us to capitalize on the expected upward momentum, while mitigating the risks associated with short-term market fluctuations. An ideal entry price for a long position would be around $2,600, aligning with the current price and providing a good entry point for potential growth. To manage risk, a stop-loss order should be placed at $2,478.63, the support price, ensuring that losses are limited if the price drops unexpectedly. The target price could be set at $2,700.09, the resistance price, aiming to capture a significant portion of the potential upward movement. This strategy balances risk and reward, offering a reasonable opportunity for profit within a medium-term time frame. Based on the provided information for Solana, a short-term investment strategy appears to be the most prudent approach. The historical price data demonstrates a fluctuating trend, while the forecast suggests a slight upward movement in the coming weeks. However, the resistance price is relatively close, indicating that the upward momentum might be limited. Therefore, a long position could be considered, with an entry price around $154, aligning with the support price and the forecast. The stop loss should be placed below the recent low of $142 to minimize potential losses. Target price could be set at $157, aiming to capitalize on the anticipated upward movement towards the resistance level. This strategy allows for a relatively quick profit potential within a short time frame, mitigating the risk associated with a prolonged market downturn. Given the price trends and forecast for Ripple, a medium-term investment strategy appears promising. The historical prices show a recent upward trend, with the current price hovering near the support level of $0.5245. Forecast indicates continued upward momentum, with prices projected to reach around $0.545 in the coming week. This suggests that Ripple has the potential for further growth in the medium term. Therefore, a long position is advisable. A suitable entry price would be $0.530, slightly below the current market price, allowing for a potential margin of safety. The stop loss should be set at $0.5245, the support level, to protect against unexpected price declines. The target price could be set at $0.550, capturing potential gains as the price moves towards the resistance level of $0.5966. This strategy balances risk and reward, aiming to capitalize on the anticipated upward movement of Ripple in the medium term. Based on the provided price data for Cardano, a cautious investment strategy appears most suitable. The 2-week price history shows a fluctuating trend, with recent prices hovering around the support level of $0.3427. The forecast suggests a slight upward movement in the coming week, but this trend remains uncertain. Given this ambiguity, a long position is not advisable at this time. Instead, a short-term hold strategy with a focus on risk management is recommended. An entry price at $0.35, slightly above the current price, allows for potential profit from minor price fluctuations. A stop loss at $0.345 would limit potential losses if the price drops. The target price should be set at $0.355, aiming to capture a modest profit within a short time frame. This strategy prioritizes capital preservation while allowing for potential gains if the forecast proves accurate. Given the price trends and forecast for SU, a moderately aggressive investment strategy would focus on a medium-term approach to capitalize on the expected upward momentum. The historical prices show a generally upward trajectory with a recent pullback. Forecast suggests a continued upward trend with prices potentially reaching $2.25 in the coming weeks. The support price at $1.7743 provides a safety net, while the resistance at $2.345 indicates that there might be some consolidation before further significant gains. Therefore, a long position is advisable. The entry price should be around $2.06, aligning with the current price and offering a potential entry point before the expected price increase. A stop loss should be placed at $1.90 to limit potential downside risk in case the price reverses. Target price could be set at $2.25, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in the medium term. Based on the provided Filecoin price information, a medium-term investment strategy appears most suitable. The historical price data reveals a recent dip followed by a potential upward trend. The forecast suggests continued growth, with prices anticipated to reach $3.74 within the next week. The support price of $3.715 provides a safety net, while the resistance at $3.86 indicates a potential ceiling for short-term gains. Therefore, a long position in Filecoin is recommended. An entry price of $3.72, slightly above the current price and below the forecast high, allows for immediate profit potential. The stop loss should be set at $3.64, aligning with the recent dip and providing a cushion against unforeseen price drops. The target price should be $3.81, aiming for a conservative profit margin before reaching the resistance level. This strategy capitalizes on the anticipated upward momentum while managing risk effectively within a medium-term investment horizon. Given the price trends and forecast for ThetaNetwork, a short-term investment strategy focused on a long position appears promising. The historical prices show a slight upward trend, with the current price hovering near the support level of $1.297. The forecast indicates a gradual increase in price, reaching $1.29 by the end of the week. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $1.28. The stop loss should be set at $1.26 to minimize potential losses if the price drops unexpectedly. The target price can be set at $1.35, aiming to capitalize on the potential upward movement towards the resistance level. This strategy capitalizes on the forecast's positive outlook and the potential for ThetaNetwork to reach its resistance level within the short term. Given the price trends and forecast for Dogwifhat, a medium-term investment strategy seems appropriate. The historical price data shows a fluctuating trend with both upward and downward movements. Forecast indicates a gradual increase in price over the next week, suggesting a potential for growth in the medium term. The support price of $2.567 acts as a safety net, while the resistance price of $2.827 presents a ceiling for potential gains. Therefore, a long position on Dogwifhat is recommended for a medium-term investment strategy. An entry price of $2.60 would allow you to enter the market near the current price and potentially benefit from the upward price movement predicted in the forecast. A stop loss order should be placed at $2.56 to protect against unexpected price drops. Target price should be set at $2.80, aiming to capture a significant portion of the potential price increase while staying below the resistance level. This strategy balances risk and reward, aiming to capitalize on the anticipated upward momentum of Dogwifhat in the medium term. The provided price information for Stellar suggests a potential for short-term gains. The historical price data indicates a fluctuating trend with recent upward movements. The forecast prices project further increases, reaching as high as $0.099 within the next week. This positive outlook, coupled with the support price of $0.0959, suggests a favorable environment for a long position. Therefore, an aggressive investment strategy for Stellar would involve entering a long position at the current price near $0.0936. A stop-loss order should be placed at $0.0959, slightly below the support price, to minimize potential losses. The target price could be set at $0.1018, the resistance level, aiming to capitalize on the anticipated upward momentum. This strategy capitalizes on the short-term bullish trend while managing risk with a defined stop-loss order. Based on the provided data for Starknet, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with recent upward movements, but the forecast indicates a slight downward correction. This suggests a potential for short-term profit by capitalizing on this anticipated decline. Considering the support and resistance levels, an entry price around $0.414, slightly above the current price, would allow for a small profit margin if the price dips. The stop loss should be set at $0.425, above the current price and the recent resistance. To limit potential losses, target price can be set at $0.39, aligning with the lower end of the forecast and below the support level, aiming to capture a reasonable profit before the potential rebound. This strategy prioritizes a quick turnaround and aims to capitalize on the short-term price fluctuations within the next week. Based on the provided data for Pendle, a bullish strategy appears promising. The historical price data shows a consistent upward trend, with recent fluctuations consolidating around the $4.25 support level. The forecast price suggests further upward movement, reaching $4.65 within the next week. This positive momentum, coupled with the support level, indicates a favorable environment for a long position. Therefore, an investment strategy involving a long position on Pendle is recommended. A suitable entry price would be around $4.25, aligning with the current support level. A stop-loss order could be placed at $4.189, slightly below the identified support price. To minimize potential losses, the target price should be set at $4.53, reflecting the resistance level and the potential for price appreciation based on the forecast. This strategy capitalizes on the anticipated upward movement of Pendle while managing risk through a well-defined stop-loss. Based on the provided information for Render, a cautious investment strategy would focus on a short-term perspective. The 2-week price change shows a slight downward trend, and the forecast suggests further declines in the coming week. While the price is currently close to its support level of $5.207, the resistance level at $5.609 indicates a potential for limited upward movement. Given this outlook, a short position seems more suitable to capitalize on the anticipated price decrease. To implement this strategy, an entry price of $5.38, aligned with the highest forecast price, would be ideal. A stop loss should be placed at $5.46 to protect against unexpected price surges. The target price could be set at $5.21, slightly above the support level, allowing for profit taking before the price potentially hits a major support. This strategy aims to capitalize on the short-term bearish momentum of Render, while minimizing risk through a well-defined stop loss. Given the price trends and forecast for VeChain, a medium-term investment strategy appears to be the most suitable approach. While the historical prices show some volatility, the forecast suggests a gradual upward movement. The current price is hovering near the support level of $0.02233, indicating a potential buying opportunity. The resistance at $0.0235 suggests that there is room for further price appreciation. Therefore, a long position is recommended to capitalize on this potential. A strategic entry point would be around $0.0225, slightly above the support level. The stop loss should be set at $0.02233 to minimize potential losses if the price drops below support. The target price could be set at $0.0233, aiming to capture a portion of the projected upward movement. This approach allows for a balanced risk-reward profile while aligning with the medium-term bullish outlook for VeChain. The historical price data for Binancecoin suggests a consistent upward trend with fluctuations. The current price is close to its forecast and near the support price, indicating potential for further growth. Forecast projects continued upward momentum, with prices potentially reaching $617 in the coming week. Considering these factors, a long position seems appropriate for a medium-term investment strategy. To execute this strategy, an entry price of $595 could be considered, aligning with the current price and providing a buffer below the recent support level. The stop loss should be set at $582, slightly below the recent support price. To limit potential losses, target price could be set at $610, taking advantage of the forecast and allowing for a reasonable profit margin. This strategy aims to capitalize on the bullish momentum of Binancecoin, while managing risk through a well-defined stop loss. The historical price data for Conflux reveals a fluctuating trend, with recent prices hovering around the lower end of the recent range. The forecast suggests a continuation of this downward trend, with prices potentially dropping below the support level. Considering this bearish outlook, a short-term investment strategy focusing on a short position seems appropriate. An entry price of $0.168 aligns with the current price and the forecasted decline. The stop loss should be placed at $0.174, slightly above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price would be set at $0.156, below the support level and in line with the forecasted low. This strategy aims to capitalize on the anticipated price decrease while managing risk through a well-defined stop loss. Based on the provided price information for Worldcoin, a short-term investment strategy appears to be the most suitable approach. The historical price data reveals a general upward trend, with recent fluctuations suggesting potential volatility. The forecast price indicates continued growth, albeit at a slightly slower pace. The support price at $2.082 serves as a crucial level to watch, as a break below this level could signal a shift in momentum. Considering this, an aggressive investment strategy would involve entering a long position at the current price, aiming to capitalize on the forecast's upward trajectory. A stop-loss order could be placed slightly below the support price at $2.05 to minimize potential losses. The target price should be set at $2.40, aiming to capture a significant portion of the projected price increase, while staying below the resistance level of $2.41. This strategy allows for a balanced approach, seeking to maximize returns within a relatively short time frame, while mitigating risk through a well-defined stop-loss mechanism. Given the price trends and forecast for Avalanche, a medium-term investment strategy appears suitable. The historical prices demonstrate a general upward trend, with recent fluctuations around the $28 price level. The forecast suggests this upward momentum may continue, with prices potentially reaching $28 in the coming weeks. However, the resistance price of $29.05 indicates a potential ceiling for the immediate future. Therefore, a long position is recommended for Avalanche. An entry price of $27.50, slightly below the current market price, allows for some margin of safety while still capitalizing on the potential for price appreciation. The stop loss should be set at $27.28, just below the support price, to minimize potential losses. The target price is set at $28.50, aiming for a moderate profit as the price approaches the resistance level. This strategy balances risk and reward, taking advantage of the bullish outlook while managing potential downside. Based on the provided data for Jupiter, a medium-term investment strategy appears to be the most suitable approach. The historical price data shows a general upward trend, with recent fluctuations suggesting consolidation. Forecast price indicates continued upward momentum, but with some potential for short-term volatility. Therefore, a long position is recommended, aiming to capitalize on the anticipated price increase. An entry price around $0.819 could be considered, slightly below the current price and offering a margin of safety. The stop loss should be set at $0.7955. The support price, to minimize potential losses. The target price could be set at $0.887. The resistance price, representing a potential upside of approximately $9. This strategy allows for capturing potential gains while managing risk within a medium-term time frame. Given the price trends and forecast for EOS, a short-term investment strategy focusing on a long position appears to be the most suitable approach. The historical price data shows a recent upward trend, with the current price hovering near the support price of $0.4766. The forecast suggests further upward movement, with prices potentially reaching $0.488 within the next week. Therefore, an aggressive investment strategy would involve entering a long position at the current market price, around $0.476, with a stop loss set at $0.472 to minimize potential losses. The target price could be set at $0.490, aiming to capitalize on the anticipated price increase. This strategy takes advantage of the short-term bullish momentum and aims to profit from the potential price appreciation towards a resistance level. Based on the historical price data and the provided forecast for TRON, a short-term investment strategy appears to be most suitable. While the historical prices show a slight upward trend, the forecast suggests a period of consolidation or slight decline in the coming week. The price is currently hovering near its resistance level, indicating a potential for a pullback. Therefore, a short position on TRON is recommended. An aggressive entry price could be around $0.16, close to the current price. A stop loss order should be placed at $0.163, slightly above the recent high, to protect against any unexpected upward movement. The target price could be set at $0.155, anticipating a decline towards the support level. This strategy aims to capitalize on the potential for a short-term price correction in TRON. Given the price trends and forecast for STRK, a medium-term investment strategy appears most suitable. The historical prices show a fluctuating pattern, with recent dips followed by rebounds. The forecast suggests continued volatility, with prices potentially rising towards the resistance level of $0.4946 before potentially pulling back. This suggests an opportunity to enter a long position when the price dips towards support levels and ride the potential upward wave towards the resistance. An ideal entry price would be around $0.4386, the support price, allowing you to buy at a potentially discounted rate. A stop loss order should be placed at $0.43, providing a cushion against significant price drops. The target price could be set at $0.49, aiming to capitalize on a significant portion of the potential upward movement before the price potentially reverses. This strategy balances risk and reward, allowing for potential profits while mitigating potential losses. Given the price trends and forecast for ShibaInu, a medium-term investment strategy appears most suitable. The historical prices show some volatility, but the forecast indicates a potential upward movement over the coming week. The current price is near the support price of $0.000168, suggesting a potential buying opportunity. Therefore, a long position is advisable to capitalize on the potential price increase towards the resistance level of $0.000232. An entry price of $0.000173 aligns with the recent price action and the forecast. The stop loss should be set at $0.00000168 to protect against a potential price drop below the support level. The target price should be set at $0.00000190, allowing for a moderate profit while staying within the projected price range. This strategy aims to capture a portion of the potential upward momentum while managing risk through a well-defined stop loss. Based on the provided Dogecoin data, a bullish investment strategy appears promising. The historical price data reveals a general upward trend, with recent fluctuations around the $0.12 range. The forecast price suggests continued upward momentum, reaching as high as $0.152 in the coming weeks. This positive outlook, coupled with the current price being supported by the $0.11899 level, indicates a favorable entry point for a long position. To maximize potential returns while managing risk, a buy order should be placed at $0.126, slightly below the current price. A stop loss order should be set at $0.11899, safeguarding against a sudden market reversal. The target price for this investment should be $0.152, aligning with the highest projected price in the forecast. This strategy capitalizes on the anticipated upward price movement of Dogecoin and aims to secure profits before the potential market correction. Based on the provided information for HookedProtocol, a medium-term investment strategy appears most suitable. Price history shows a fluctuating trend with a slight upward bias. The current price is near the support level of $0.4308, suggesting potential for a rebound. The forecast also indicates a gradual increase in price over the next week, aligning with the medium-term bullish outlook. Therefore, I recommend a long position on HookedProtocol with an entry price around $0.4308, the support level. The stop loss should be set slightly below the support at $0.4250 to minimize risk. The target price can be set at $0.4544, the recent high point, allowing for a reasonable profit potential within the medium-term time frame. This strategy capitalizes on the potential for a price increase while managing risk effectively. Given the price trends and forecast for Aevo, a medium-term investment strategy appears most suitable. The historical prices show a slight downward trend in recent weeks, with the current price hovering around the support level of $0.3446. However, the forecast suggests a potential rebound in the coming week, with prices expected to rise towards $0.355. This indicates a potential buying opportunity for those looking for a medium-term investment. Therefore, a long position is recommended on Aevo. An entry price of $0.340 could be considered, allowing for a buffer below the current price and the support level. The stop loss should be set at $0.335 to minimize potential losses if the price falls below the support level. The target price should be set at $0.360, aiming to capitalize on the forecasted price increase and reach the resistance level. This strategy allows for potential profit while managing risk within a medium-term time frame. The recent price action of Notcoin suggests a potential for short-term gains. The historical price data shows a general upward trend, but with some recent fluctuations. The forecast indicates a slight upward movement in the coming week, with the price potentially reaching around $0.0081. This suggests a bullish outlook in the short term, given the support price of $0.008038 and the resistance price of $0.008413. A long position could be considered to capitalize on this potential upward movement. An entry price around $0.00795, slightly below the current price, would allow for a margin of safety. The stop loss could be placed at $0.0078, protecting against any unexpected downward price action. The target price could be set at $0.0083, aiming to capture a significant portion of the potential upward movement. This strategy focuses on a short-term investment horizon, aiming to profit from the anticipated price increase in the next week. Suncoin's recent price history shows a fluctuating trend with a slight downward bias. While the historical data suggests a potential for price recovery, the one-week forecast indicates a continued downward trend. Considering this, a short-term short position appears to be the most suitable strategy. The entry price for this strategy should be set at $0.019, close to the current price but above the immediate support level of $0.01828. The stop loss should be placed at $0.0192, slightly above the entry price to limit potential losses. The target price should be set at $0.0179, aligning with the forecast and allowing for a reasonable profit margin before reaching the support level. This strategy capitalizes on the potential for a short-term price decline, while managing risk through a well-defined stop loss. Based on the provided Pepecoin price data, a short-term investment strategy appears to be most suitable. The historical price fluctuates around a relatively narrow range, suggesting a period of consolidation. The forecast indicates a slight upward trend, but the movement is expected to be gradual. Given these factors, a long position is recommended. A suitable entry price would be around $0.0000995, slightly above the current price and the support level. The stop loss should be set at $0.0000980 to limit potential losses if the price drops unexpectedly. The target price could be set at $0.0001060, aiming to capture a portion of the forecasted upward movement. This strategy allows for a relatively low risk, low reward scenario, suitable for a short-term investment horizon.